Hello traders, it's Samurai Trader here, going to be giving you a Euro USD 5 range bar Forex recap since the market opened on Monday. Sunday of course in the USA when the market opens, so we'll be going through the trades. Another thing I'd just like to mention, I'm getting constant emails and text messages and Skype calls about opening a trading room. Well, I've decided to. I'll be running a room for 5 hours per trading day, trading the futures and Forex markets during the US session. Now I will be limiting the room to a maximum of 50 seats because the whole concept is also it's to be very educational. So I'll be calling trades out for Forex contracts and the futures contracts and taking questions from my members, and it's designed to be very educational. So if you'd like to drop me an email at rayftrader@gmail.com to register your interest. And yes, my new website is still on the way. It's just taking its time along with my new email address, but in the meantime continue to use the Ray F Trader. So it'll be a very educational room. Most of you know that that trade with me already live know that I usually have my 4 winning trades within an hour. So I'll be running it for 5 hours a day, and my students will be in there as well. So good stuff, lots of good stuff will come out of that. So let's move on and have a look at the 5 range euro dollar. Now of course the euro dollar is probably the most liquid currency in the world. You don't tend to have the massive moves except around red flag times as you do on some of the other currency pairs. So I love to use this as a training example, and as I always say, that every market has its personality, and that also comes down to the Forex market as well. So different pairs have different personalities. Here, as I say to all new students, trade with the trend. Now of course my experienced students, once you know the correct trade setup such as the T18s etc, or the T19s, the T89s, of course you can take those, but remember we're seeking a 2-to-1. that is, for every dollar we risk we want $2 back, which is really important. So I don't want this video to go too long today, so let me just let's go across here off to the left here. A comment I've got down here: caution when entry well out of a channel. So we can see our channel here, and we've well and truly broken out of a channel. The market had been open for 40 minutes Sunday afternoon US time, or Monday morning Australian time. Here each one of these candles of course is 5 range or $50. And so if you got in on this one, this is a classic T2 signal, so just a beautiful signal. The market had already been open for some time. You could have actually got in on a smaller T2 back here. Either way, your stop was well under here. Nice trade. We had a T89. A T89 of course is where we have our entry outside the channel. It's a counter trend trade. If for our counter trend traders, it was also a T19A. T19A is where we have nice divergence, and look at that. And that's another great thing about trading Forex. Putting spreads aside, which is a contentious issue, fortunately we've seen the NFA and CFTC and the regulators around the world come down on the brokers globally, and so we're seeing these massive fines being taken out against most of the brokers and banks around the world. So it's becoming a much fairer trading field. However, we're still seeing spreads at times can be very wide. So effectively, if you're trading a standard lot, you may be effectively paying $30–40 in brokerage, where if you were trading a futures contract as an example, you're paying no more than $5 with most of the brokers. So remembering of course that our spreads, our brokerage, our commission is a lot higher. So that's why generally I'll generally pay or trade, I should say, the futures contracts myself. But anyway, the point I was about to say, sorry for being long-winded here, is that futures is a great technical market, and of course it's very predictable in the basis that there are thousands of other traders around the world also taking out and trading the key trade setups, which means in many cases it's a self-fulfilling prophecy. So if we look at the T10s, which is a money on the floor trade, here's a very nice one. Now the white paint bars you can see here, of course, appear after that first tick of a second candle here. So your entry was actually here. Very nice trade. Now because generally your stop is going to be 12 ticks here, plus your spread, so 14, you need at least 14 pips I should say. Your target's going to be a minimum of 14 ticks, which would have been filled out down here somewhere, to make sure that in pips that of course you've got a minimum of a 1-to-1. However, using the zero lag, which is our magenta line here, you can stay in trades a lot longer, and so you've got a beautiful T2 down here, which is a winner. Over here we had a perfect T1, oh sorry, T2 I should say, set up here, but those of you that are waiting, which I recommend that you wait for the zero lag, you weren't in the trade until here, when then you ended up having both a T2 and T1. Now for the newer traders watching this video, the language that I'm using or the codes I'm giving, you know, there's in total we've got 12-13 different setups. You only need to master one, and you hear me talk about this in every recording that I do, in every training session. And the white paint bars are the trades that you'd be taking. They're either T1s or T2s. They're very mechanical in nature, and that's really important, because having a rules-based trading strategy, what it does, it removes a good deal of the emotion. Now one thing you also really have to watch and look out for, and it's just checking a couple of times a day, is any major news announcements. So we're always going to be checking red flags, and just remember, whenever you're doing any back testing and you see some very big moves, and you'll see, you know, you move right away from the moving averages very violently, remember, just check the time on the bottom no matter which software program you're using, because sometimes they can happen within seconds, and it can be very deceiving for any back testing you do. Now let's stick with the trend trades. We had a pivot bounce here, which is a T18. Now once again, T18, that is when you're outside the channel. You want to be really ready to go to break even fairly quickly with those. Beautiful T1 here, another T2 and a T1. Look at that, we're well oversold on our long-term stochastic. Come up, slingshot, it's perfect. Forget this one here, let's just talk about with trends. Here we had another T2, and which ended up here turning to a T1. However, following the rules, you wouldn't have actually entered until this candle. Why? We're waiting for this zero lag here to roll over and for it to confirm our trade. Let me just move right along here. We had a pivot bounce. I was doing some live training with someone, so ignore I was actually testing them here, so ignore the question marks here, traders, please. We actually had another potential entry here on one of our setups. However, no Z, and that's what the ZL means, no Z lag, because remember, here at cyan we wanted to turn magenta to confirm it, and it's absolutely invaluable using this as a guide. As much as the experienced traders will quite often jump in earlier, for the newer traders it really keeps you on the right side of a ledger. Here you had a beautiful T10. Once again, the long-term stoke is heading in your trade direction. You've kicked down, your short terms rolled over, and up you go. Here, this is a textbook T89. Price entry is outside the channel. You would have ridden that one right down. That was just a beautiful 2-to-1 trade. Here you had a T10. Now the note I've got here is that note the 89 200s, you're in a sideways market and you're right on a pivot. So you can see the pivot there, the black dashes there. This is a real area of chop. Remember, and also the other thing here is time of day. So this is 3 o'clock in the afternoon. Sorry about that, traders. Let me just get rid of this one here, just an alarm going off here. We can see here that down here it's 6 p.m. so it's this is the Asian session, very quiet time. Now as much as that there was only 8 or 9 pips in total, and the comment was time of day and time of day, when you've got the 89, the 200 and right up pivot, this is a real danger zone. You really want to watch and look at your clock. So that could also mean, by the way, we're heading up towards a red flag or a major news announcement. Here for those that were game, this is actually the London Open, my apologies. So you quite possibly you would have been in on this one. This is also a pivot bounce. You've gone up, hit the pivot. However, notice how you're still up against here, and you would have been stopped on this trade if you had have taken it. Now your entry wouldn't have been until this candle, or you might have taken this one if it was a straight pivot bounce. Either way, notice the tail on this candle, it would have taken you out. You had then another beautiful entry here on that trade there. Perfect classic pivot bounce here. You had a perfect T10 going up to the long side. Then you still would have been in that trade, by the way. So here to the long side, and you wouldn't have been in this one anyway, because notice our zero lag. Then you had another. Now this is you're getting these higher lows. You can see that there coming up here. Then though, we have a classic 200B bounce. Now the 200 EMA, the 89s and the 200s, you bounce off these every day of the week, every trading day. They're just a rock solid, reliable trading signal, and you're trading with the trend. And you happen to have, what else do you have here? You've also got classic divergence in the direction of the trend. When you have divergence in the direction of a trend, you bank the farm on it. Not really, but it's a very bankable trade. You can see we've had that there. Here another nice T10, and let's just move along here. Now this is an interesting area. We've come down here. It's the market's been moving fairly quickly. It's actually, let me just, sorry traders, I want to check the time here. 16, so that was 4 o'clock back there. My apologies, no wonder the market was funny. Okay, now we're getting to the London market open. My apologies there. So you can see we're bouncing on a weekly pivot from the previous week here. Now don't fight against the pivot. When you hit these weekly pivots, etc., very real danger zone. And you can see here we've had 1, 2 bounces, we've had divergence, and the reason we mark this one up, this is the trade here. As we're pointing out, you're better off just sitting out of it, because weekly pivots can be very strong. Then we get a trade away from the pivot, and if you hadn't have taken that trade, that would have been mighty fine as well. This is just a really dangerous zone. You can see here a zero lag sideways, our channel. Then up we go, T10, T2, T2, we're at a T89. Once again there, it's a counter trend trade. It's even though you're out of the channel, you had no divergence at that stage, so even for the game counter trend traders, that was a really dangerous one to take. The next one delivered, and let me just quickly explain what we're looking at here. Of course, here you had a T2, a slingshot trade. You can see we're well oversold with our long-term stochastic. We've come down, slingshot, bang, up we go. That was good for around 15 after the spread, around 15 pips. Which is what you're seeking as a minimum in scalping. So here, look at all these scalps we've got, all with the trend. And if you look at this, traders, and this is something to consider, you know, look, I'm after, as my experienced traders know, $200 a day per contract I trade, and I trade 10 lots at a time, and most of you watch me live on the futures contracts. So if I was trading this, I'm after minimum net of 10 pips per trade. Here I'm after, I'd be going for about 14 because of the spreads, but after doing this, you finish for the day. You know, now some traders will go all day. Myself, I love lifestyle, so keep trading with the trade. Here, look at this here. A lot of people would have taken this counter trend trade. Yes, I know it's a pivot bounce, but they're dangerous. The trend is your friend till it ends. So trend, winner, winner, winner. Now remember also what one of the rules are is that the closer you get towards a pivot, or what I call magnets here, always trade towards them. Is that just remember, price is always going to, or nearly always, go up there and hit that magnet or hit the pivot. So just be well aware of that. Here your entry actually would have been on that candle just there. Once again, you've got a perfect T2 and a T1 signal here. Your target there, as an example, this is a good example to bring up. you may say, okay, look, I'm after 15 pips on average on these moves. However, when you see you're going to hit a pivot, logically your target's going to be 1 or 2 pips before the pivot, because generally speaking, as we can see here, you're going to bounce off. Now here, this is what we marked up live here. As I said, and this is something I can briefly mention to you, we're hitting a danger zone because on the platinum we're well below now the zero line, which is generally a shorting area. So you want to be very careful. You can see the zero lag is slowly falling away. Our channel is sideways. It's a real danger zone. You may have got bitten on this one, okay, so you may have jumped in on this, but even if you did, you also then had what? You're always looking down here at your long-term stoke. What have we got here? It's a T10. Notice how your long-term stochastic is falling down. If you want to be conservative, you can wait for the paint bar, okay. You wouldn't have got your 12 ticks or pips until down here, but this is another example. Where would have your target been? It's going to be the 89, because remember, what are the magnets? What are the areas of support and resistance? They're going to be your 200, your 89, and your pivots. Here we've got another classic T1. This is actually an 89 bounce. You're bouncing off the 89 EMA, and up we go. You've got a beautiful, I say beautiful, I've got to stop using that term. Here we've got a 89, a T89, just to the short side. You've got divergence as well. Counter trend trade, once again, new traders, you're not going to be taking those. Here you got another bounce, thank you very much, and you got another one, little double top forming. You're getting very toppy here. If you look along there, you can see basically that we've got, what have we got here? Okay, almost a triple top. You may have survived that. You may have been taken out because on this trade here. Then you got another 89 bounce. Then you got another classic with trend trade. So traders can see here, these trades are around an 80% trade, so they're very bankable. They're just a great scalper winner. On this particular one here, if you look at this here, you wouldn't have been in till here. That would have been a loss, but then you got your winner. Now here, by the way, your entry was not over to this candle, so you did not enter until here. Why? Look at your zero lag, and you would have taken some pressure and you would have been stopped out on this tail anyway. So your entry was not here. This trade continued till over here. So let's have a look here. Now notice what's happening here, traders. We're hovering around. New York is opened or about to open, so this is the New York open. This is a real danger area. As we can see here, we're pivoting around the pivot itself. Here we can see our long-term stochastic is falling. Now for those futures traders that follow me, you know that I don't trade the first half an hour of the open of the London session. So the same goes, in my opinion, with Forex, because you get a lot of instability in the market. No one knows where it's going to go, so you want to be really careful around the open of London, red flags, and of course around the open of the New York market. So moving along, down here we've got a T89. Now once again, the T89, very quickly mention that for the experienced traders, you really want to see some divergence as well. So this T89, your price is well out of a channel. You've got a reversion here. Wait until you get some divergence on the platinum as well, as which you had here and here. Now both of those were winners then, but if you jump in without that divergence on the platinum, of course you can see that both that would have failed. Anyway, you had a beautiful a 200B here, and that's the other thing I should point out. To take this is, once again, what did I mention about the 200? For 200 and the 89, a very strong resistance. All right, so they can be resistance or support. So even taking that would have been suicide, because you're going to bounce, which is exactly what happened. Once again, stick with the trend. You may get less trades, but you're going to have a much healthier bank account at the end of nearly every trading day. 200 bounce, another nice 200 bounce, both winners. Now the difference on these T89s is what, or on this one I should say, is you got divergence. Here we've got a T7 is a double bottom, perfect double bottom with divergence, and away it went. Here you've got a T2 and a T1, but the T2 fired off first. Once again, where is your first target? It's going to be the pivot. Notice here, remember I said to make sure you're a pip under the pivot, and you can see here the tail has just gone up there. So either you're under there, got taken out, or you would have bought your stop up very quickly, because look what happened, it then fell over. You had divergence as well. You had here another T89. Now at this stage here, you're not really sure what the market is doing. See how MAs are going sideways. We've got a T89. Now what makes this a really good T89, and I don't have divergence on the platinum, well, you've got very slight divergence, is this. Notice how far outside the channel we are. Now your entry wouldn't have been till this candle here, but look, if you had ridden this one down, look how far it goes. Now we've got this T1 marked up, and it's really almost a T2 marked up here. But when you get these big T89s, don't ever trade against them, because they're like a slingshot. They're going to sling right back again. And look at your long-term stochastic, see it falling, then it turned into a T10 anyway. So be very careful when you see angulation, when you move right out of the market like we've got here. See between there and there you've got a big wedge. Be very careful, traders, in trading against those. A T10, you had another T10. Then what did I say about the 200? We've got two 200 bounces in a row here. Now as much as we had a couple of signals here, but look where your stop is going to be, or sorry, where your first target. If you jumped in here, your target's going to be here anyway, so it's really after the spread. It's not even worth it. And here, this is suicide, because when you come down, you've just had a T1 T2 here, and this actually formed into a T2, but you're right on the 89 and 200, and once again you're going to bounce. And by the way, the 89 and 200, it's a standalone trading strategy. We call it an 89B and a 200B. Why? Look at these bounces, 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 T89 well out, you can see here. So you can see, traders, that trading with the trend, there's trade, and this is right up till now. So we had a red flag announcement. Sorry, let me just remove that. Just remove that from it. We had a red flag, didn't do a whole lot very quickly here, but the Australian dollar, by the way, really moved. So I won't jump over to the dollar chart, but had some violent moves. So once again, red flags, you want to be out well and truly before you get those red flags announcements. Here, ignore that arrow, look at the zero lag all the way down here. Now you can see here the paint bar, yes, you would have made very good money on that T89. Then you had a bounce. Now remember, these bounces can be quite good, but then you had a lower high. So these are a really good signal that you're changing market. So when you get these paint bars, so here, see this one, that's higher, that's a higher high, this is a higher low, and this is a lower high. Some traders, of course, would have taken out the low there. See the fractal, these black lines? They would have taken, when you get a lower high, one of your entries can be right there, or some would have jumped in here. The challenge in jumping out in right here, as we did, we saw a little bounce, it bounced but then collapsed anyway. Then we had a T1 that was at what time's that, around 12 o'clock our time, and we can then see that you still actually would have been in that trade anyway. So traders, that's a very quick rundown. Sorry about this going off continually. Traders, if you don't already subscribe to my YouTube channel, please do. It's quite a mouthful. It's been a very long night, and it's early afternoon here. And please, once again, drop me an email if you'd like further information on our live trading room, where we'll be calling these trades and futures trades in real time. So great opportunity to get the cash register ringing in real time. Thank you, traders. Speak soon.